Hello and welcome to the Weekend Investing Daily Bite of 4th of October, and the market was whipsawing like anything today. First a cut down and then a sharp bounce up, and then a further cut 25,000. In fact, broke 20 on the way down, but recovered slightly towards the end. So overall, a not so good day again for the Nifty. Small caps and mid caps cracked very hard in the beginning of the day, but recovered somewhat uh, during the day. And being the last day of the week, I think a lot of weak hands would have gotten out. So, given that all the pressures have been more or less external and no internal news as such, it doesn't seem like this will continue for too long. But that's just a guess right now. Today's discussion will be around when will markets recover, and we will look at historical market falls and try to analyze and gain insights into the recovery process. First, please try to subscribe to the channel. A special payday offer campaign is currently on. Please use the code payday20 to get some discounts on mi India top 10. Markets, you can see, has broken down from this particular trend that we had, have broken down below the 40-day moving average that we were tracking, and now the pivot around 24,800 is the important pivot. This near 25,000 period line also is important because this was resisted for a long time before we went up. So 25,000 as a round number also is psychologically important. Uh, the recovery was very sharp, but it succumbed to FI pressures. Likely, we will see a very large FI sales figure again today, but we will know towards the end of the day. So Nifty overall down 0.93%. Nifty next 50 recovering a little bit towards the end, but basically coming back to mid July levels now, and minus 1.1%. So the pressure is very much evident on Nifty Junior as well. In the Nifty mid cap space, again a breakdown, some recovery from the bottom, but again 0.9% is the cut there. So mid and small caps haven't really fallen apart. Usually when markets fall, large caps will fall X, and mid caps and small caps will fall much more than that. So that is not yet happening. Small caps also down 0.8%. So everything is pretty much in the same ballpark of about a percent of cut. Small caps were falling much before large caps started to fall, and we are now back to where we were beginning of August on small caps. I would still think that small caps have a very good recovery that is happening as and when there is any upward U-turn. Small caps are the first ones to go up again. Bank Nifty took a sort of support on this long-term trend line, has been falling now for 5-6 sessions, down 0.74% today. But I think most of the damage probably is done unless we have continuous selling from FIIs going forward. Advance declines actually better than yesterday. We were at 50 advances to 450 declines yesterday. Today we have 128 advances to 371 declines. So the concentration or the force of the down move seems to be reducing on a day-to-day basis from yesterday till today. Of course, FIIs had a big sell figure yesterday of 15,000 crores, but DIIs also bought nearly 13,000 crores. So almost everything that FIIs were selling were bought by DIIs, but sentimentally, markets have come off quite a bit on this selling. Heat maps were again quite red. IT trying to stand out as defensives. ONGC on the back of crude oil moving up very sharply. Some autos were reasonably flat except Mahindra and Mahindra, Eicher Motors, and Hero Motors. You had some deep cuts in FMCG stocks, surprisingly. So Nestle, Hindustan Levers, ITC, Britannia, Tata, consumers all down. You had some deep cuts in Bajaj Group. You had a deep cut in HDFC Bank, ICICI Bank, Reliance. And just like yesterday, State Bank of India did not fall. So that keeps my hopes alive that this is a blip and it can U-turn, because State Bank of India usually is, my economy barometer. If State Bank of India was falling like 9 pins, then of course the entire market will follow that. Within the Nifty Next 50, there was more red. So you had Gas Authority, DMart, Colgate, Adani and Sol, Jindal Steel, which was up yesterday, Pidilite, Trent, REC, all doing DLF doing 2% or more. And you had Bank of Baroda, PNB, IRFC, LIC, Zomato, Torrent Pharma, ICICI Pruli, Canara Bank. These were the ones which were standing out to some extent. Sectoral trends, PSU banks and IT 0.5% up, and you have all other sectors down. Pharma also down only quite a small bit, 0.4%. Metals also down 0.4%. Metals, remember, for the monthly basis, are the best performing sector of the last 1 month, backed up by China news. Real estate continues to bleed, 1.8% down again. So this just 1 week, real estate has given up 7.8%. Autos also continue to bleed at 1.3%, down 6% this week. Energy stocks also down 5.5%, and private banks at 4.9%. So metals are the leading sector for the week and for the month going forward. Uh, in FMCG stocks, we have returned back to this breakout of mid-August. You can see Nestle, Colgate, United Spirits, Britannia leading, and even big names, ITC and Tata Consumer, giving up some of those gains. Stock spotlight was on VIP Industries. So after a sharp move in the morning, opened here, went down below 520, and then reversed completely. This is telling you how strong this stock is. Despite the market weakness, it is able to withstand the market pressure and actually close very near all-time highs, up 7.8%. That tells you a long-term story is very much intact and potentially is going to look for newer highs going forward. So the question now is, when will the markets recover? Frankly, the answer is nobody knows, but let's try to analyze what is happening. Nifty has now fallen 4% from all-time highs. So we have now returned to where we were on the 1st of September. So, 1 month of basically nothingness is there as of today. And that's no big deal. I mean, if your portfolio was at X on 1st September, and if your portfolio matched the Nifty, or whichever way, somewhere around that, we may have lost these last 4 or 5 days of gain. That's about it. I mean, so don't. So the first thing that I want most people to do is, don't anchor your portfolio to the point it has reached. If my portfolio had reached, let's say, 50 lakhs, and today I am at 48 lakhs, then I should not be regretting that I had reached 50 lakhs. You should be looking that I had invested 20 lakhs and I'm still at 48 lakhs. So it is a matter of how you look at the market, because falling is a natural part of the market. You can't buy at the bottoms and sell at the top. So, it is just like that. You will not cry every day that you are getting older. It is a process that is going on. You can't help it. This is also like that. I mean, it's a process that is going on. You can't help it. So might as well, be happy with whatever is happening. So we've analyzed all 2%, 5%, 7% plus falls in the last 5 years. I know last 5 years is not indicative of the entire market history, but I mean, we are uh, going to look at the last 5 years. Uh, the number of times we've fallen 2% plus has been 17 times. We've fallen 5% plus 7 times, and we've fallen 7% plus 3 times in the last 5 years. Right now we are at 4%. So we are in this category. We are yet to go into this category. Average sessions, I mean, it took 5 sessions to fall 2% in this one, 18 sessions to fall 5%, 55 sessions to fall 7%. And sometimes it has happened in one session also. One session down, it did 2% and it did 5%. But 7% fall has taken 39 sessions at the least. That 39 sessions would translate to almost a couple of months. Uh, and most sessions to fall would be, 3 weeks for a 2% fall, almost 7 weeks for a 5% fall, and almost 16 to 17 weeks for a 7% fall. So this has been the falling statistics of the last 5 odd years. Now is the recovery statistics. So average sessions for full recovery for 2% falls have been 77 sessions, 155 sessions for 5%, and 299 sessions for 7% fall. So if we um, uh, and the most sessions for full recovery have been 401 sessions, so which is much more than. So this would have happened in 2021 after September, October, where we took a year and a half or 2 years to really come out of it for full recovery, going to a new high. So the fact is that we are now at a point where it is likely that it will take time for recovery. If it happens in a V-shape recovery, I mean, that is like very, very low probability, although it can happen. But it is likely that we are getting into a corrective mode, and especially if we break down below that August low, that is still not broken. So there is still hope that the recovery can happen over a few weeks. But if that pivot breaks down and the market starts to fall in a bigger way, then a few months probably will get required. So right now, because you can see that this was a probably a crisis point post election, where previous lows would have gotten broken, but it just about managed to hold there, uh, and make a new sort of higher low at 23,900, and then we made this. So I think 24,800 and 23,900, these will remain to be the bigger important pivots, uh, and as long as we don't break 23,900 or 24,800, we are good to go. 24,800, if we don't break, then probably in a few weeks we could go to a new high. If we do break this, then maybe some consolidation may be required in this zone. And if this zone breaks down, then of course a much deeper. Then we are looking at maybe nothing in this calendar year. So this is where that kind of a situation. The 5 and 7% fall will come at 24,970 and 24,442, just about where I'm saying those pivots are. So even if we fall 7, 8, 9%, then the recovery could be extended in 2 months. So while this is academic uh, probability orientation, I mean, it doesn't really say what will happen. And of course, in the markets, you should not be looking for what will happen. If you are looking for what will happen, you are asking the wrong question to start with. And if somebody is telling you that I know this is going to happen, please go to the next channel. So, I mean, if this fall is causing panic, then you need to check your behavior, why it is happening, why you're getting panicky. Maybe you are overexposed to the market, maybe you have over leveraged your position, maybe you are in very concentrated nano cap or some SME stocks. I don't know. I mean, so you need to relook that, this is not even a fall actually. We are down 4% from the top. And if it is causing panic, you need to revisit your situation. Uh, are you following any strategy that allows you to automatically rebuild, repair, and renew the stocks in your portfolio if the market goes down? So let's say if you are following a momentum strategy, then for sure, as stocks may fall, either you will go to cash or you will go to some maybe some defensive stocks, and as the markets will rise, it will rotate back into stocks that are performing. So there is nothing really to worry about as such. But when you do discretionary investing, when your friend has told you that you should have bought this stock and you bought that stock at the peak and now it is down 30%, then that is a problem, because you don't know whether you should exit, you don't know whether you should add, you don't know whether you should reduce, and whether you should change to another stock. So not having a plan is the biggest disaster in the market. Having a plan and making a little less than your friend is all right, but not having a plan and trying to become like James Bond in the market, that is always going to hurt. So also this is the time when you should reflect upon that, why this person has been talking about asset allocation all the time, because in 4% itself, if it is causing some jitter for you, then imagine what happens at 25%, 30%, because that can also happen. 40%. Nifty was down 70% in 2008. Nifty was down 35% in COVID times. So and stocks were down 60 to 80% many times. So don't have this unrealistic expectation that stocks will not go down. They can go down dramatically. And if you are a proper, focused investor who is also looking for scenarios ahead of time, that what will I do if this happens to me, then you should be doing asset allocation also. um, for instance gold, for instance other asset classes. I don't know what all you may have interest in. So this situation should not cause you to think about your strategy today. You should have thought about all this earlier, but in case you haven't, it is always good time to learn and to strategize for the future, because you will be doing this for the next 10, 20, 30 years. So make sure that you have proper planning for your investments. Make sure that nothing happens in the market that can ruin your sleep. That should be ensured, because when your sleep will get ruined, you will take rash decisions, you will take bad decisions, and you will in fact ruin what was already going on in your portfolio. So let me know your thoughts on this, as to what is your guess on when the Nifty recovers. My guess is as good as yours. So I'll look forward to your comments. Do like and share these videos if you do like them, and do subscribe to the channel. Thanks. Bye.